market movers. Live from Davos, Switzerland, for the World Economic Forum. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua, live in Davos for our final day of coverage from the World Economic Forum meeting. Now, this hour we'll speak to the EU's Economy Commissioner Valdis Dombrovskis. We'll also bring you exclusive interviews with the chief executives of Euroclear and FirstRand. But a lot of the focus here has been on Donald Trump, on some of the things that he's been telling also the virtual audience here, tariffs, China, oil. Now, the week that started off a little bit fraught with risks is actually ending up on a positive note. Now, global stocks at a record high. The U.S. president appeared to soften his approach towards tariffs on China. And then the other thing we really need to spend a bit of time on his BOJ, with the yen strengthening after the Bank of Japan raised interest rates. Now, a couple of other things we're watching out for is, of course, European benchmark. Look, that index climbing also for an eighth day. It's on track for a fifth weekly advance, and that's despite a lot of the concerns that we're hearing for European chief executives about what Trump tariffs mean for them. A couple of market stories. Shares in Banca Monte dei Paschi slumping after the Italian lender launched a takeover bid for Mediobanca. We'll get to that in a second. We also have some data. Euro area January manufacturing PMI rising to 46.1. The estimate was 45. Remember, anything that's actually below 50 is still a contraction, so nothing to write home about. And then Euro area January services PMI also pretty much unchanged at 51.4. Now, European luxury stocks have been boosted by Burberry this morning. The company's shares actually soaring after picking up a U.S. demand, and that boosted result, raising investor hopes for a luxury market recovery. We've been following Burberry very, very closely. First, they have a new chief executive in charge, but secondly, it has really been slammed over the last 6 to 8 months, the share price. So we're seeing a nice recovery from Burberry, 16% higher. Now, talking of share moods, Monte Paschi also, those shares have fallen sharply after it launched an all-share takeover bid for the Italian lender. Now, it's the latest step amid a wave of deals, news from the country. So if you look at Mediobanca, it is not listed. And then what we're seeing, of course, for some of Monte Paschi, actually, Mediobanca is listed at 16.1, gaining some 5%. It is, of course, listed, and Monte Paschi down some 6.8%. Now, it's been a week here in Davos dominated by President Trump's first days in office. In a virtual address yesterday, the U.S. leader demanded OPEC lower oil prices and the world cut interest rates. Now, he repeated his tariff threats. He accused the EU of going after U.S. tech firms. Now, the U.S. president also delivered a surprise jab at Bank of America's Brian Moynihan, who was sitting on the stage here at the World Economic Forum.
I hope you start opening your bank to conservatives, because many conservatives complain that the banks are not allowing them to do business within the bank, and that included a place called Bank of America. They don't take conservative business. And I don't know if the regulators mandated that because of Biden or what, but you and Jamie and everybody, I hope you're going to open your banks to conservatives, because what you're doing is wrong.
Well, let's get more with Sridhar Natarajan, Bloomberg's chief Wall Street correspondent. Sri, so you've been following all of the bankers here, and they have like a complex relationship, I would say, with Donald Trump, but a lot of them are really happy that there's going to be deregulation and animal spirits. And then there was this weird moment where Brian Moynihan was on stage and the president was in the White House, and he got this jibe about not banking conservatives. What was that about?
Complex relationship. That's exactly what's the right term to use here. Brian Moynihan, the CEO of Bank of America, walks up there with a bucket of praise for the 47th president and the 45th president of the United States, Donald Trump. And instead, the president turns around and pours cold water on him. That is why this is complex. All bank CEOs, much like corporate America, much like the tech CEOs, all business leaders have been trying to say positive things about Donald Trump, trying to make it sound like everything he's doing is the right thing. And they've perhaps understood that flattery is the best way to get good results out of this president and hopefully out of this administration. Yet, Donald Trump used that platform where he was ostensibly addressing not just the American CEOs, but the global business audience to rail on these banking leaders. Brian Moynihan, who was on stage here in Davos, but also Jamie Dimon's JP Morgan, saying that they're shutting out conservatives because this has been a pet peeve of the Republican base that elected Donald Trump and brought him back to the White House. It was an interesting moment and stage to make that point, but that is Trump, true to form, unpredictable.
Yeah, unpredictable, but also it is strange, as you say, because it's basically shaming him in a public forum. I mean, those kind of conversations usually behind closed doors where the chief executive decides that he can do something about it. Does it hurt the credibility of Wall Street? Will they fight back? I mean, how do you see this relationship ending?
Much easier to answer the will they fight back question. Absolutely not. Look, they know that there's no way that this president will stand criticism. In fact, many people have gone out and said, and it's been obvious, that he's a little bit thin-skinned about criticism. Flattery is the only way to go forward. And look, they want a lot out of him. Their hope is that when you have the two sides of Donald Trump, the trade wars, the tariffs, the unpredictability, the volatility of policy, the policy whiplash, which can be bad for business, and weigh that against the possibility of banking deregulation, broader deregulation, tax cuts, that would be much more important to them on the longer term and could weigh out all the negatives that Donald Trump brings out. So that's what they're hoping, or if they can goad him in that direction, they are willing to take whatever punches comes along the way.
Sure, do you see a real divide between European bankers that are frankly quite depressed about regulation, being unlocked in the US whilst they have to deal with some? And is that, divide between Wall Street and Europe going to widen significantly?
I mean, you just have to look at the kind of conversations you've had with business leaders all through the week. The European business leaders who've come on TV shows here and elsewhere, the tone, the confidence and the vibe that they've been expressing, and compare that with the rah-rah optimism of the American business leaders, it's clear. Look, the numbers show it. IMF expects, just bumped up its growth forecast for the US, 2.7%. Eurozone overall, 1%. That's a very clear divide there. And that's why the phrases that we have seen come out of this is peak confidence, peak optimism, cautious optimism, even if you want to be a little conservative out of the US, but peak pessimism out here in Europe.
Yeah, and also massive kudos, of course, to our Italian team who broke the story of Banca Monte dei Paschi making this offer for Mediobanca, which frankly was quite unexpected because it's the smaller bank trying to buy the big one. But, how is Wall Street looking at some of these concerns that we can't get cross-border, but you could see quite a lot of domestic consolidation in Europe?
I think for a while it's been clear for the European banking industry to be able to compete with the American banks, you need larger banks. You need to have stronger players. Cross-border deals have not had much success. There's always seems to be a lot of obstacles on that front. So instead, let's focus on creating domestic champions. However, this one's interesting, and the Italian banking landscape in general has been interesting. There have been so many interesting deals. This one, obviously, is fascinating because it's a smaller bank making a play for a bigger bank. A few months ago, you had UniCredit making Banco BPM a takeover target, which itself was going after a domestic asset manager, and then you have UniCredit with what it's trying to do in Germany. So a lot is happening, but in this deal in particular, it seems a little challenging because the premium is only 5%. Analysts have already come out and said there are not a lot of synergies at play, so they don't really see how this can easily succeed. And if you also look at the holdings of the two companies and the two different billionaire clans and the cross holdings across the two companies, it makes you wonder whether, while the proposal might be aggressive and creative, will it actually get done and get over the line? It doesn't look quite like that. And the stock market reaction that we've seen would also suggest that it may not quite get there.
Yeah, it's very clear. Mediobanca, I think, up some 5%, and actually Monte dei Paschi down some 6%. Shri, as always, thank you so much for joining us. Sridhar Natarajan, Bloomberg's chief Wall Street correspondent. Now, coming up, we'll speak to the chief executive of Africa's biggest bank, FirstRand. We'll get her thoughts on the South African economy and the impact of Donald Trump's policies on the continent. This is Bloomberg. Welcome back, everyone. Now, the South African president, Cyril Ramaphosa, says he expects to find common ground with his U.S. counterpart, Donald Trump. Now, the South African Reserve Bank governor warned here in Davos that U.S. protectionist policies could fuel inflation and put pressure on the rand. America is the African nation's second largest trading partner after China. Well, someone who's positive about South Africa's prospects over the coming decade is Mary Vilakazi, the chief executive of FirstRand, Africa's biggest bank by market cap. And Mary joins us for an exclusive interview. Thank you so much for joining us. There's a lot of concern out there. There's also a lot of optimism. Frankly, this is like a Davos I've never seen before because you have these competing forces. How much do you worry about the macroeconomic outlook because of possible Trump tariffs?
Thank you for having me. I think, as the Reserve Bank Governor pointed out from South Africa, we worry about the inflationary impact that the tariffs and the other policies that I think are going to be driven by the US. Although having said that, I think we still have to watch the execution of what Trump also says. So, I suppose one has to make sure we don't completely get ahead of ourselves. But what is positive from the focus on the US growing its economy and doing whatever it takes is that I think it's forced a lot of countries to sit back and say, how are we going to grow our own domestic economy, which in Africa has been neglected for a long period of time. So it's good, though, that for South Africa, we were already on a path of economic reform. So if it was 3 years ago, I think it'd be paralyzing. So I think, it's going to be inflationary. The dollar's going to be strong. That's not a good thing for emerging markets. So I think the competition for capital is going to be real. And that's what we also need to grow the economies.
So is there, I can't tell whether it's a good thing because it means that it needs to act, right? So we're hearing that from a lot of European leaders, whether it's a kind of impetus to challenge or whether you think there'll be a downturn and then, parts of Africa can rise.
Well, I think in general, I'm in the camp of the people that it will get better. Because I think people will respond. Nations will also respond to what's happening globally. Of course, it impacts the global growth because then we're not probably growing at the potential or what we were used to. But I think that's just the reality we have to get used to in this new world that we find ourselves in. It is going to be very difficult for countries that have high levels of debt in Africa because I think with a strong dollar, that's not a good thing. And then I think ultimately, for me, the bigger concern is what happens to U.S. debt.
Of course.
That's got huge ramifications, I think, for us in South Africa as well. Yeah.
So does it mean that you're preparing your bank to, you're shifting things to make sure that you're prepared for any eventuality?
I think we've been prepared. We've been preparing for quite some time because I think the number of shocks, the frequency of shocks impacting financial markets is something that's of concern. And the focus, making sure that we're resilient, I think has been a very big focus of our bank and the sector, I know for sure. So, we have to make sure that we adapt. But as I say, we're very mindful of what happens with sovereign debt because that's got serious knock-on effects. Yeah.
Are you planning to invest in South Africa this year? And if so, how and how much?
So that's definitely high up on the agenda. I think with the economic reforms, for a first time, I think they've got significant projects that are on the way. I think that the need for lending to help the economy is quite significant. I think we would need more than the banks can actually facilitate. But, I think we have to make sure that we make a compelling case against all these other competing needs. But certainly, I think there are projects that we can see that haven't come about. Household confidence has improved. Business confidence has significantly improved. So, high up on the list of investable opportunities for the bank is the South African economy.
And so that means fixed investments, basically. You're really seeing opportunities because of some of the structural reforms that have been put in place. How do you see the outlook for South Africa, after the election cycle?
It's been very positive. I think we went into the election cycle with a lot of uncertainty. And I think emerging from a period whereby the ANC lost elections for the first time after 30 years, and then quickly coming on to realize that they need to get other parties so they can govern, and then prioritize growth. I don't know how long in South Africa we have gone on without the government indicating that economic growth is a priority. So I think it's been very encouraging. Of course, the government of national unity has its own vulnerabilities, but I think beyond what plays out in the public, I think there's real commitment to making sure that it works. So, as business, I guess we are rallying behind supporting the government's agenda because I think that's greatly aligned to what we have been wishing. And I think the impact of the structural reforms is going to, that's the only way we create jobs, something that's been stagnant in South Africa, and also just so that we can go back to growing the economy beyond the 1% area that we've been in. So I think if one looks out, 3 to 5 years' time, I think the South African economy would have recovered. And we're seeing encouraging signs day by day.
And with that comes opportunities. Thank you so much for joining us today. That was Mary Vilakazi, the FirstRand Chief Executive. Now, coming up, we'll speak to Euroclear's Chief Executive, Valérie, Urbain, on the potential impact that President Trump will have on Russia's frozen assets. So that's a good conversation on money moving around for reconstruction. That's next, and this is Bloomberg. While speculation is mounting on President Donald Trump's potential impact on Russia's frozen assets. Now, this comes after he announced a 90-day executive order suspending foreign aid to countries, including Ukraine. Now, Belgium-based clearinghouse Euroclear holds the bulk of Russia's frozen assets. The chief executive, Valérie Urbain, joins us now for an exclusive interview. So thank you so much for joining us. I mean, this is extremely critical moment, actually, to see what President Trump wants to do in Ukraine. Without the support of the U.S., it's going to be very difficult to see some kind of peace agreement or pushing back Russia. Where do you stand on the negotiations on the frozen assets? This is basically, you know, the idea that you could take the frozen assets to help reconstruct Ukraine.
So first of all, I would like to say that this war is a tragedy, and all our thoughts go to the people who are impacted by the war. Now, since the start of the war, we have always been dutifully respecting the international sanctions. Yeah. And as a practitioner, we have the duty, the obligation to really inform properly all the decision makers, the policy makers, about the unintended consequences of various decisions. And so as far as the confiscation of assets is concerned, it's a debate which is on for almost 2 years now. Yeah. And fair to say that on our side, what we have also tried to defend is the rules of law, and to make sure that, you know, the rule-based system that has really underpinned the trust in the financial markets remain. And so this is why, you know, talking with the different authorities, we are putting in front of the people, you know, the sovereign immunity as well as the asset protection.
Yeah. Can you give us so first of all, how many of these assets, like how big are these assets? What are they?
Well, it is really the reserves of the foreign reserves of the Central Bank of Russia, so it is sizable, you know. Yeah. And indeed, these securities, which now have been transformed into cash, actually, have been immobilized for now since the start of the war. Now, the first thing which has already happened is the payment of the windfall contribution, meaning that all the revenues, the interest revenues that we are earning on these immobilized assets have now, you know, been given to the European Commission through the windfall contribution to already, you know, support Ukraine in its reconstruction or if anything what they need.
How do you see Donald Trump's presidency changing all of this?
Well, I think Donald Trump will certainly, you know, put pressure to negotiate with Russia, and of course, everybody will welcome, you know, the peace. So I think, unfortunately, I think where I stand, I don't have really any control on that. What is important is to see how the negotiations unfold and how we continue to inform as best as we can the decision makers on the unintended consequences, knowing that there could always be also countermeasures from Russia, which could further destabilize the financial markets.
So, for example, I mean, should the member states be responsible for guarantees in case Russia then reclaims some of these assets back?
That's a very important point, and indeed, this is part of the unintended consequences. You know, to make sure that if we seize the assets, you know, it's not only the assets which are being seized, but also the liabilities, you know, are put together and are taken, because otherwise, Euroclear could be at a certain point of time faced with the fact that, you know, the assets are gone, but the Central Bank of Russia is claiming back its securities or its cash. You know, so indeed, that's why it's a complex matter, because you really have to look at all the different angles of the equation.
I mean, I know right from the start you highlighted the risks, for example, of EU member states deciding to confiscate the assets. I mean, recent voices say, look, some of the risks that were talked about at the time did not materialize. Why do you think that is?
Well, can you?
Is it more like of a timeline? So, for example, the voices, including Mr. Dombrovskis, who will have in a very short while said, look, the assets were immobilized, but the risks surrounding them, so either reclaiming or not, or going lost or legally disputed, that didn't happen. Could it still happen, or is it a matter of time?
It can still happen, and I mean, we have seen the case in the case of the Iranian assets, where 20 years later, I mean, the claim has come in. So I think this is not something which is theoretical. Now, the timeline is not yet there, this to happen.
So what do you see as, what do you think is the right way forward?
I think the right way forward is certainly to start more negotiating the peace, and then probably these assets will be an element in the negotiation. But I think this is what has to start, certainly.
I mean, do you see enough people talking about this here? This was, talked about as one of the top risks of how to deal with Russia and the confiscated assets. But
I can assure you that many people are talking about that. Yeah. So I think, it's very much very high on the agenda of everybody. Yeah. And so indeed, I think everything which is related to sanctions, related to the way forward with the assets, all of that is really part of the conversation, of the daily conversation, I would say, by all different decision makers.
Do you think we're closer to a resolution? Because you can talk and talk, but not want to find commonality, right?
Yeah, but I think, I mean, to come to a resolution, you need the two parties to agree with that,
So let's see. So your work is not done.
No, not at all. And I still believe that this could last quite for some time.
Okay, thank you so much for a very important interview. The Chief Executive Officer there of Euroclear, Valérie Urbain. Coming up, we'll speak to EU Economy Commissioner Valdis Dombrovskis on Donald Trump's tariff threats and how the EU plans to respond. That's next, and this is Bloomberg. Good morning, everyone, and welcome to the final day of our special coverage live from Davos for the World Economic Forum annual meeting. I'm Francine Lacqua. Now, President Donald Trump has made fresh tariff threats against the European Union. This after he criticized its trade practices and regulations, describing them as unfair. EU finance chiefs, however, have warned against hasty retaliatory measures in response to the threats. Where I'm very pleased to be joined now by Valdis Dombrovskis, EU Economy Commissioner. Commissioner, thank you so much for joining us.
Good morning.
Were you in the room yesterday listening to Donald Trump?
Indeed, I was there and listening to both the speech and panel debate.
And so what did you make of his speech and also the questions that were asked from chief executives?
I would say there were no major new announcements, but in any case, it's clear that we'll need to engage closely with the Trump administration. EU and US are strategic allies. We had been working closely together for decades. If we discuss economic cooperation, EU-US trade and investment cooperation is largest in the world. Yeah. And together we make 42% of the world GDP. So there's lots at stake economically.
Yeah. But Commissioner, do you know if the new Trump administration has already reached out to the EU for talks, or has there been a phone call?
There had been contacts at different levels of administration, and certainly will engage intensively because what President Trump has now announced regarding the tariffs, that federal agencies in the US need to study the topic and then come with some reports and suggestions. So it also gives us more time for engagement, for working with Trump administration and hopefully finding constructive solutions.
How do you think the Trump policies will actually change the European economy?
Actually, if it was to go in the direction of global economic fragmentation, it's going to be damaging not only for European but for global economy. There are estimates that if this global economic fragmentation would take place, meaning trade focusing within certain geopolitical blocs, it can lead to a decrease of global GDP by 7%. It's like taking Germany and France's GDP combined out of the world economy. Mm-hmm. So it's indeed a damaging scenario, and we should work to avoid it.
I've heard a lot of pessimism, actually, from European chief executives. You worry about, pessimism now, worrying about what happens in the U.S., impacting capital expenditure in Europe, and therefore being a self-fulfilling prophecy.
Well, one thing is clear that also in the EU we need to work ourselves to strengthen the competitiveness and resilience of European economy. And all in all, European economy has been resilient in consecutive economic shocks, starting with COVID-19 pandemic, then economic implications on Russia's aggression in Ukraine, which are mostly felt in Europe. And economic growth in EU is continuing despite all this, and this year we expect around 1.5% growth. Obviously, it's relatively slow growth. Yeah. But then there are also structural issues like relatively slow productivity growth, which we had already for decades, falling behind US and also China in terms of productivity growth. And we need to address it. And that's why the new European Commission now, in a new mandate, we are putting lots of focus on strengthening EU's competitiveness.
But, Commissioner, do you believe that Europe, for example, should cover the American part of the bill of financial support for Ukraine if Trump cancels its contribution?
Well, there I would say that the financial support for Ukraine, at least for this year, is secured, both through the EU's Ukraine facility, but also through G7 loan. And from this G7 loan, U.S. contribution was $20 billion, which are already transferred to the World Bank, and $1 billion is already transferred to Ukraine. So we do not expect that this money would suddenly not be available. So the money for Ukraine is available for this year.
For this year, but what about next year? I mean,
well, certainly we'll need to engage with the Trump administration to discuss for the coming years. That's very clear. In any case, EU's Ukraine facility goes till 2027. But what is more imminent right now is a question of weapons supplies, ammunition supplies. It's something Ukraine needs right now, and it's important that these supplies continue.
When you look at the next 12 months, what does Europe need now to counter some of these tariffs? You talk about competitiveness. Do we need to spend more? Should we do away with some of the debt management mechanisms of certain countries?
Well, first of all, as I was mentioning, we are working with the Trump administration, and hopefully we can avoid certain damaging scenarios. But then, in terms of the EU, will be outlining our approach how to strengthen EU's competitiveness with so-called competitiveness compass, which we're going to put out later this month. And obviously, it covers many areas. It's not only about budgetary spending. It's many issues which we need to address: reduction of administrative burden, addressing our relatively high energy prices, labor skills, and so on and so forth.
But it must be frustrating that Europe has been so slow. And again, even if the tariffs don't hit Europe, we think that capital moves to the US instead of Europe because it's just more attractive with more growth.
Well, and that's exactly what we are currently now working to change, to make competitiveness of European economy a priority, and indeed to make European economy stronger.
What's your hope for Germany? So we're 6 weeks away from actually 4 weeks away from the election there, and Germany, I guess, needs to be stronger for the good of Europe.
Well, indeed, Germany is the largest EU economy, so what happens in Germany affects the entire EU. And there is also, I would say, acknowledgement in Germany itself that they need to invest more in infrastructure, in their technologies, companies, and this is what we are hoping is going to happen.
All right, Commissioner, thank you so much. I know you have a lot of work ahead of you, given the next 12 months. Valdis Dombrovskis there, the EU Economy Commissioner. Now, the European Investment Bank also says it expects to double the amount of investments it facilitates for defense and security this year. Now, this comes after years of underspending by European Union member states. Well, I spoke with EIB President Nadia Calvino, who says the region is seeking to jumpstart the industry.
We're already walking the talk. Last year, we mobilized €1 billion in investment for the security and defense industry, and we expect to double that amount in 2025 so that we can really support SMEs and the large innovative contractors in Europe.
Do you have already very specific projects that you could point to, or is it too soon?
We have already invested in a number of projects that have to do with military mobility, infrastructures, also space, satellites. We are currently studying a number of projects. I hope that and I'm confident that in the course of 2025, we're going to see large European projects that will surely make a difference to Europe's defense capacity.
Do you also expect some of these defense investments to happen in Ukraine?
Well, our scope of activities is inside the EU when we're talking about security and defense. But obviously, what I can also say is that our support to Ukraine is unwavering. And we have already disbursed 2.2 billion euros in support to Ukraine since the beginning of the war. We implemented a 600 million security program for the winter in the energy sector. I was with Minister Marchenko earlier in the week, very impressed that with all these attacks, there have not been blackouts in Kiev. And I think that this support, this unanimous support from the European Union is surely going to continue in the course of the year and until, I hope soon, we see the peace in our eastern neighborhood.
What about some of the investments regarding climate change? So does it move away from the US into Europe, some of the private money that you can then support?
Well, you know, I think that climate action and the green transition has moved into a new phase. It's no longer driven only by grandiose objectives or political commitments. It's much more driven by technologies and business cases. I think that companies have realized that there's a business case. In the case of Europe, it's a no-brainer. We need to become independent from fossil fuels. It's a matter of security. It's a matter of competitiveness. We need to have the cleanest and cheapest energy sources possible. As I said a moment ago, we need to master our own destiny, and that means relying on our own forces. And that, I think, makes it clear that European companies will continue to lead the green transition, and we will seize all opportunities in this regard.
But what does Europe need now to make sure that, for example, startups that are flourishing stay and grow in Europe and maybe IPO in Europe rather than going elsewhere?
Well, that's the area where there's a bigger gap vis-à-vis the United States. This has been identified in all relevant reports. And so we're working together with the Commission and with the Member States to foster this capital markets union, to see how to mobilize money from the cradle to maturity of these companies. In the first instance, research with grants, but then venture capital, venture debt. We are already active in all these areas, but we also need to scale up our support to successful, innovative European companies so that the bright ideas, companies, technologies that are born in the EU, they can grow and prosper in Europe.
What's the right way, actually, to kickstart Europe? I mean, there's a very big divide between American investors who are very excited about deregulation and some of the animal spirits really coming back in full force in the US, and Europeans who feel left behind.
Well, I think that deregulation is not the solution for everything. You know, there's this sort of magic word, you know, that everybody is counting. No, in the case of Europe, we need to reduce red tape, to simplify the rules, to recalibrate green reporting standards. We're also working and engaging with the European Commission to make sure they're fit for purpose. But what we need is integration, investment, you know, and Europe starts from a very strong position. We are a trade powerhouse and innovation powerhouse. When we're talking about clean tech, health tech, we're second to none. So we should be also more self-assured. We have a strong basis on which to build. If we are united, we will be successful.
Well, that's the European Investment Bank President Nadia Calvino. Coming up, we'll look at how markets have responded to President Trump appearing to soften his stance on tariffs on China. That's next, and this is Bloomberg. Well, global stocks rallied. The dollar weakened as President Trump appeared to soften his approach towards tariffs on China.
We have one very big power over China, and that's tariffs. And they don't want them, and I'd rather not have to use it. But it's a tremendous power over China.
Well, for more, let's bring in Bloomberg's Valérie Teitel. Valérie, break down the market impact that these comments had. A lot of whipsawing.
Exactly, Francine. A lot of it has been in the FX market. A lot of heat has come out of the recent dollar rally. The market really doubting whether we actually see any of these tariffs on paper anytime soon. It's led to a big move lower in the 5 days since Trump was inaugurated, down nearly 1.6% in the last 5 days. And not helping this situation is the better than expected PMI data we've gotten out across Europe. We flip the board and just check on how the euro is faring. A big leap higher in the euro, up 0.8%. And in the pound, that's from the PMI data coming in better than expected, dashing some of those fears about sour economic data continuing here in Europe. And lastly, Francine, adding more fuel to this dollar weakness, it was what happened in the Bank of Japan decision. Yes, they hiked rates, but they also upgraded their inflation forecast. That hawkish signal to the market saw dollar yen to the downside, down 0.3%.
Valérie, thank you so much. Valérie Teitel there with some market moves. Now to some other stories making news. And Boeing has reported fourth quarter revenue that missed estimates after last year's bruising strike that idled almost most of its aircraft production. Now, preliminary results show sales were $15.2 billion, less than $16.8 billion expected. Well, Boeing took a hit of over $1 billion in charges tied to the strike and also updated investors on the impact from troubled defense programs. And Tesla will release a software update to about 1.2 million of its cars in China to fix issues with the electronic power steering and rear view cameras that pose safety risks. Well, that's about the half of the fleet that Tesla has sold in the country in 2024, and that's according to the China Automotive Technology and Research Center. Now, President Trump has used his return to the White House to press OPEC nations to bring down prices by increasing production. He also wants greater domestic supply. Let's bring in Will Kennedy, Bloomberg's senior executive editor for energy and commodities. Will, thank you so much for joining us. I mean, I thought it was quite interesting that he kind of went after Saudi Arabia and saying, like, look, they should have, done something for the price of oil even before the election to help out. Just hours after Saudi Arabia said they would invest $600 billion in the U.S. What's that relationship going to look like?
It's a really interesting question, and it will be, as it was in the first Trump term, a very important relationship. This is an old tune that Trump sang throughout his first presidency, and it appears that he's going to keep singing it during his second presidency. But there are a lot of things that we don't know yet, and whether this is just rhetoric. And there are bits of his energy policy, principally about what his sanctions on Iran and Russia are going to look like, which will determine how this plays out. Because obviously, if oil production were to fall from other OPEC members, Iran in particular, that might give room for Saudi Arabia and other OPEC members to increase production. And let's remember, the policy aim of OPEC is to bring more oil back into the market this year if it can. Now, the tension is going to be that Trump clearly wants much lower oil prices. Saudi Arabia, the UAE, want prices to stay around the $80 a barrel mark, we think, and perhaps even a bit higher.
Well, I mean, I guess what's missing in what we heard from Donald Trump, and it's the first time, his thinking is, look, if the price of oil is lower, it helps him out. It also squeezes more Russia, which helps with Ukraine. Do we know what he's prepared to do about it?
No, we don't at the moment, and I think at the moment it is just rhetoric. He will want to speak to Mohammed bin Salman, of course, and as you said earlier, it's a complicated relationship with investment and arms and all sorts of things in the mix, and he'll want to work out what his policy on Russia and Iran is. But I think it just shows that reflexively, Trump is always going to put pressure on OPEC. He wants oil prices to be lower. He sees it as a key part of his fight against inflation.
Well, what should we be watching out for in the next couple of weeks and months? What do we know about also how much extra oil will be drilled in the U.S.?
This is the other part. I mean, of course, Trump rhetorically has said, I want to unleash oil production in the U.S., and he is going to do lots of things. We saw through executive orders to try and make that easier in terms of deregulating the industry. But most people in the industry think that actually scope is limited for that to happen. The Permian, where most growth has come from in the last decade, that big oil field, shale oil field in Texas, is maturing. It won't grow as fast. Oil companies aren't willing to invest that much. They're going to concentrate on profit. So that may not be as spectacular as he hopes, which again feeds into this OPEC path, because if he's not going to get the oil production from the US to the scale that he's sort of asked for, it may have to come from elsewhere.
Well, thank you so much. Bloomberg Senior Executive Editor there for Energy and Commodities, Will Kennedy. Now, coming up, it's been a week. It's certainly been a week and a half here in Davos, dominated by President Trump's first days in office. We discuss the key takeaways from the World Economic Forum next. This is Bloomberg.
I'm also going to ask Saudi Arabia and OPEC to bring down the cost of oil. I'm surprised they didn't do before the election. That didn't show a lot of love. With oil prices going down, I'll demand that interest rates drop immediately, and likewise, they should be dropping all over the world. I really would like to be able to meet with President Putin soon and get that war ended. We've been having massive deficits with China. The EU treats us very, very unfairly, very badly. My administration is acting with unprecedented speed to fix the disasters we've inherited from a totally inept group of people. My message to every business in the world is very simple. Come make your product in America. You and Jamie and everybody, I hope you're going to open your banks to conservatives, because what you're doing is wrong.
Well, U.S. President Donald Trump weighing in on the Fed, oil prices, and of course plenty more as he addressed the World Economic Forum. Now, Trump has dominated, frankly, the conversations here in Davos. We discussed the week that was. I'm joined by Chad Thomas, our Bloomberg Europe executive editor, but actually more than that, he's our Davos tsar, because he organized and sent headlines and got the scoop. So, Chad, you're still standing. And you look far too fresh.
Beautiful last day, you know.
Yeah, it is a beautiful last day. I mean, yesterday was incredible. So I tried to get in. So you had basically 4 chief executives on stage with Donald Trump from the White House kind of being beamed in. I tried to get in, and it was full. It was impossible to get in.
It was the seat to get this week here, even though he was only being beamed in, but you had the CEOs on stage. You had to have a white badge, basically, to get in. You have one of those, but even you didn't get in. It was packed. People wanted to hear what he had to say.
And he's been dominating the agenda because of the inauguration, because of tariffs, because of concerns over inflation and geopolitics the whole week.
Basically, it's really interesting to see how, even though he didn't come here, he dominated the discussion here in Davos. That was what everyone wanted to talk about, and every morning I think people were waking up at 4 or 5 to see what executive orders did he sign overnight, what did he say regarding tariffs. There was always a new country that was where there were tariffs threatened. Tariffs seem to be what is going to be his go-to method to try and get people to do what he wants. The threatening tariffs on Russia, if they didn't fall in line in ending the war in Ukraine, it's clear that that is what he's going to do when he wants something from various countries.
Yeah, it also reminded me that then he gave an interview and saying, but, you know, tariffs are not the only way for China. Is that's how he negotiates, but you're unclear whether he follows through. Like, you don't know, what's policy and what's a negotiating tactic.
China is the really interesting one here, Francine, because if you had asked people 2 weeks ago, what's the country that he's going to probably come out and hit really hard, they probably would have said China, but he's actually been really soft on that. And then with TikTok as well, and saying, well, do they really need to sell their U.S. operations? It's something only that, kids use to watch videos. It's interesting that he has been soft there. He wants China also to help to end the war between Russia and Ukraine, and he thinks China has a lever there to play. So he has been softer on China this week so far.
I mean, I heard one chief executive saying, he's assuming that the presidency is just going to be one big transaction, right? So yesterday we saw the Saudis give $600 billion or pledge $600 billion to invest in the U.S. But then the president still saying that he wants OPEC Plus and Saudi Arabia to do more to lower the price of oil.
Yeah, it is going to be very transactional, and there was also that moment with the Bank of America CEO Brian Moynihan where he really took him to task, saying that they weren't, lending to conservatives in the way that he wanted. So he definitely isn't afraid to call people out. He isn't afraid to say, this is exactly what I want. And the thing is, even if you give what he's asking, there's probably going to be another ask.
Yeah, and all of this mostly in public forums. So again, that changes the dynamics.
It's not behind closed doors. Yeah.
Chad, thank you so much. Chad Thomas there, our Europe executive editor, and of course, the man who's put Davos and our coverage together. Well, that brings us indeed to the end of our week of special coverage from Davos. Up next, Bloomberg Brief, Manus Cranny in New York, and this is Bloomberg.